countries holding a phone conversation last night. There is still uncertainty since a meeting between President Trump and Xi Jinping has not been set, which leaves investors anxious about the deal's future. Joining us right now is Market Compass LLC founder and CEO Amelia Boudreau. Good to see you, Amelia. Thanks so much for being here.
Good to see you. Thanks for the invite.
A lot of uncertainties from the standpoint of a market advisor like your firm is.
Yes.
From China to Brexit. How are you invested right now, and what's most important in terms of allocating capital?
What's most important right now in terms of allocating capital is volatility. If volatility stays low, meaning we have certain outcomes today, especially with the Brexit vote, if we get an actual outcome that they take the deal, you'll see sterling rally because markets like certainty. So you would see equities up in the UK, you would see the sterling rally. If we continue with some sort of uncertainty in terms of China trade and also Brexit, that's going to rise volatility. That could weigh on, US equities because equities don't like uncertainty in any country. And so what we're really looking for is some certainty from the market in both the China trade negotiations and Brexit today with their vote.
Even without these two things, you've got an economy that's lucky if it grows 1% in Europe for 2019.
Yeah.
So how have you been advising your clients on that story?
To be sure, the euro, we've already seen a great loss in the euro, but I think it will go to parity actually with the dollar. Last week's ECB meeting, Draghi did a very interesting thing the ECB did. They introduced a new loan facility. They said the economy is slowing. They slashed their growth forecast, but they said the risks are still weighted to the downside, which is highly unusual for the ECB after taking all those measures. And the reason they said it was still weighted to the downside in Europe was because of Brexit and trade negotiations. The ECB has no policy control over those two things.
Well, the political environment over there really is also uncertain.
It is,
and
yeah.
the OECD you saw come out asking or telling the ECB, the European Commission, that, look, you probably need to inject more stimulus into the economy really to stabilize things there. Is that what you expect? What do you think the next move is over there?
I do. It's very tough. We have the European parliamentary elections coming up at the end of May, and some populist parties are coming to the forefront. And why that's dangerous for the euro especially is because these populist parties are anti-euro. And so that's also going to weigh on the European sentiment. It's also going to affect European government's ability to pass measures to stimulate the economy as well. So
what are you telling your clients about the odds of going into recession either in Europe and or in the United States in the next 18 months?
I think the odds are quite high that Europe will go into recession in the next, I think, even 6 months. I don't see the U.S. economy in recession, at least for the next 12 months, just because growth has been so strong in jobs and wages. And I know we just had a disappointing jobs number for February, but I think it's a bit of an aberration.
The wages were not disappointing.
Yeah, right.
No, the wages were not disappointing.
Growth, the best since April 2009. So finally people are making more money.
Yeah, they are, and that's great. And so I don't see, consumers halting their consumer spending at all. I think it'll just, keep on going. We'll see a little, drop off in the housing sector. But, the U.S. economy is strong, especially relative to the rest of the world.
All right, we'll leave it there. Amelia, great to have your insights. Thanks so much.
Thank you.